Joining us now is Glen Kacher, Light Street Capital founder and CEO. Glen, thank you. Happy New Year. Appreciate you being here. Maybe we can just start with your playbook for 2024 to get a sense of where your head is at with regard to the recent run-up in AI names, those that are adjacent to AI, and then how you're thinking about things, how you're constructing your portfolio going into 2024.
Sure thing. So, I think that when we look at AI and the opportunity there, this is a multi-decade opportunity. And so, as much as there will be ups and downs over those decades, we look at this as being a huge tailwind and opportunity that compares to the shift from PCs to networked or client-server software, and as well the move to the internet 1.0, and as well as the move to the mobile internet. So this is a massive opportunity for the leaders in the technology sector, and AI is an incredible opportunity for investors to deploy their capital behind this trend.
But given where various multiples are, what is the best way for investors to get that exposure? Is it through kind of what some see as the purest play exposure, Microsoft, or is it the chips? Is it other pockets in software or elsewhere that you think would be a better value for investors?
Yeah, we definitely are focused at this point on the infrastructure investments. We think that this is the semiconductor part of the tech complex most directly. If you think about it, these are like the bridges, tolls, and highways of AI. So right now we want to have maximum positions in NVIDIA and AMD. Broadcom would be another company we see as being very well positioned. I'd say as you shift and look at the software industry, again, we want to stay with the infrastructure names, the big hyperscalers and hosting companies, as well as some of those platform and OS vendors, Microsoft being the one that's probably best positioned in that group.
Yeah, NVIDIA, at least according to your latest 13F, your top holding about $47 million at quarter end there. Some say that the Magnificent Seven stocks have traded, at least at the beginning of the year, almost like safe haven stocks that were really stoked by that AI boom and AI hype. But then investors grew more confident in the direction of the economy in the fourth quarter, the potential for a Fed pivot, and they've been more muted. How do you look ahead kind of to the macro picture next year, and how does that inform the exposure you want to have to some of these larger cap names?
Yeah, I think that some of the worrying about Magnificent Seven exposure is a little overdone. Again, these are the companies in technology. They have the customers, data, and they have massive amounts of capital. And most of them have very established, high-profit business models. So they are the best positioned companies for this trend. And so for most of the Magnificent Seven, we're very positive about those companies. Sure, macro is always a worry, and as an investor, you have to have one eye on macro and the other one on fundamentals. But right now, we feel really good about some of those large cap technology companies.